Yo, what's up? Can you hear me?
Yo, I hear you. You hear me?
Yes, I can hear you.
Oh, that's
What's
okay.
up, man? How you doing?
I'm fine, man. I'm fine. How are you?
Hey, man, I'm doing good, man. I'm doing good. A lot
Yeah,
going on, a lot of changes.
a lot is going.
Um,
I'm
yeah,
like, this is some generational stuff, bro. Some
I,
gener-
I I wanted to ask your thoughts on it because I mean, a lot of people panicking, man. I'm talking about a lot, and I'm not. I mean, I'm not really panicking. I've been investing. I bought a few, bought a few different stocks or whatever. Um, But like I got people like I ain't never really had people calling me or DMing me like, "Hey man, what's going on?" Like my 401k, this,
yeah,
and I'm just like, to me
yeah,
personally, like I like Warren Buffett, I like Charlie Munger, I like the long term thinking, I like the long term look at the market, and I'm thinking like, well, you're 35, your 401k is not going to be available to you for,
for a
you
long
know,
time.
a long time, but like that psychologically that really messes with people, man. They see that red and they can't handle it.
Yeah, yeah.
People can't handle it, man.
Well, I think it depends, right? Like, if some people have brokerage accounts and they really have it as their savings account. You know what I mean? And
Yeah,
so, for those people that kind of dip in and out of their brokerage accounts, they have less capital to use for projects. Even
yeah,
things, even I mean that's one of your points is well made, is like, what is your time horizon for the capital that you need, right? So if you're talking about a retirement account, it should not even be a thought in your mind. You know what I mean?
mhm,
Like even until you're 55, even later than that, like it doesn't matter. Like, the market goes up, the market goes down. It is what it is.
yeah,
But I think it becomes different when you have your money in a 529 account for your kid to go to college, right?
yeah. And then now it's like, okay, it's time. Like, it's you got 6 months to really exercise that money, and now it's like, oh, it dropped
Mhm.
30%. So now
Yeah,
it's yeah, no, that's
yeah.
definitely
So it's just like, when do you need the money, right? And if you don't need the money for years in the future, this is just an exercise, right?
yeah.
And this is something where it's going to come now. You know, the scarier part of this is that, what's being done right now is creating a really a transformation of the economy, right?
Yeah.
And not many times want to go, people want to go backwards, 100 years towards manufacturing, but like, this is a fundamental change in the way that we do stuff. So,
Let,
for
let's jump into it because I don't know how long you got. So and
okay.
definitely want to respect your time, bro. So I want to jump into it, introduce you, and then we can just
Oh,
go
okay.
and
All
just
right,
give
cool.
game all day.
Yeah, man.
It's pre-recorded too. It's not live. It's going to go up exactly like right afterwards, so we
Yeah,
can take out or edit anything.
sure.
Um, but yeah, you know how we roll. We just usually just go.
Wow.
And I
Yeah.
got a ton of questions of people
Well, I
just
mean,
been
this is just a good, like this is when we need to talk about it. So
yeah,
this is,
yeah.
yeah, yeah.
All right. All right, guys. Welcome back. This is stock market update. Y'all know I usually do this and bring you guys great entrepreneurs, great mentors, great investors who can give you some game on your portfolio. And we got the man. Hey, we ain't talked in a minute, but I'm glad we can do it. This is the perfect time. I can't think of a better time to do this.
Yeah.
Savoy Brummer, healthcare executive of a $1 billion company, medical doctor, became
Investor
investor, became
too.
a multimillionaire by investing his money,
Yeah,
and
man.
wants to just give you guys game and give you guys a different perspective on wealth building as a professional. Because a lot of times people think, oh, I got to go out and start this business. I got to go out and do this. And it's like, I love your story because you've built your wealth the way that is so relatable to most people. I went to school, you got a good job, and you just continue to invest your money, and lo and behold, you're financially free very early in your life, and you can do the things that you want to do. But a lot of people can relate to your story, so I want to make sure we give you your flowers early before we
Oh
jump
man,
into this.
man, I always appreciate it. Like again, what you and Black Millionaires have done for young people, especially as they're kind of transcending their education to becoming a professional, to really having a longer term, you know, thought as to what is their risk tolerance, how does the economy work, how is the economy tied to the market, and more importantly, what are the things that we can kind of look around and do for ourselves so that the next generation, the folks that come behind us can do better, right? So that's what it's all about. It wasn't a quick switch type of thing. It was just slowly investing, making wise choices, thinking about the long term, and it's things that I try to teach my daughter. It's things that I try to teach my friends. And if you guys know this guy, like he's come out to LA. We broken bread. We talk about all kinds of different things, from the market to venture capitalist stuff to different types of currencies. Like all these things are interrelated,
Yeah.
but we really just need to be smart because today is a transformative time for the economy. I think that this is something that nobody's ever seen before. My parents, th- nobody's seen this, right? And so
Yeah.
we really need to make sure we understand what's happening
Yeah.
and the signals of what is said versus what's theater, and what just what are we going to do. And we always thought none of us have all the answers. The things that we want to talk about are kind of big picture and making sure at least we understand things. I've got my private bankers, I've got my folks that are giving me this advice. I like to bring this in. These are things that typically people who have very large portfolios we can access for.
Yeah.
Essentially, let's bring that information to young investors, to people who are young professionals, so that they can get the same information as well. So
Yeah.
yeah,
So
get through it.
the big word in finance is tariffs, right?
Right.
People it seemed like people just learned the word, right? Because we never seen, well, I never seen um a president use the word tariff or use it as leverage or whatever he's trying to do. We can get into that a little later, but could you define what is tariffs? Because people hear that and then some people say it's a tax. Some people don't understand that the US pays tariffs on a lot of the goods it sends out. So could you just give us like a 30-second, elevator pitch on what tariffs is for and how it.
And actually, and really, it's like, well, why they exist, right? So, um, tariffs are basically charges that are placed for goods and services that are made that are not made domestically, right? So, when we look at things um, uh, that are imported from China, that are imported from Vietnam, that are imported from the United Kingdom, many times we place an extra charge on those goods.
Right.
Now, traditionally, that's done because when we who are the builders, who are the entrepreneurs, make goods outside of the United States, we can do so for a very, very, very small cost, and that's because the labor is so less expensive in the Philippines than it is in San Francisco, right? The amount that we pay the workers. And so that creates an unfair advantage, right? So if you're, to many people's point, if you are making all your goods and services in another country that have cheaper expenses, then once we start building things in this country, it creates a competitive disadvantage, right? So we try to level the playing field with some tariffs. Additionally, when the United States makes goods and services here, other countries have historically placed tariffs on those goods and services, right?
Yeah.
Especially a lot of technology, right? Because we make a lot of our technology. Although we import the goods, the actual assembly is done here and it's exported out other places. Um, Food, especially agriculture, we're kind of like one of the large bread baskets of the world. But when we ship that out, other countries tariffs place tariffs on us. I think that the issue um, that occurs is that when you do place large tariffs on your goods and services that are imported, that then creates inflation, right? It is very true. It levels the playing field, but as a consumer, as you and I who are going to go pick up, our clothing or Jordans or our iPhones or whatever we're purchasing, we as the consumer now have got to pay more than we would have because the tariff has been placed on other companies and they're typically passing that through to us as folks who are buying the goods, right? So whenever tariffs are placed here in the United States, they are trying to protect the workers who are here, right, who are making the goods, but ultimately the cost of those increases are either eaten by the companies that are making them, or two, just pass along to the everyday person. So in economy terms, that's called a regressive type of tax, right? It's not a direct
Right.
tax on us, but it's regressive in that the more that you spend, right, the more that you try to purchase, that's where we're going to see that tax. And for those people who make a smaller amount of money, right, that regressive tax is going to hit them more, right? If it
Right.
costs more for clothing, Jordans, phones, as a percentage of your income, that is much more expensive than for those at higher income levels where you don't feel it as much.
Correct.
Large macro perspective is you can only, especially for lower income folks, for middle income folks, you can only spend so much money, right? So if you get very large tariffs that are placed and they're passing that down to consumers, they stop spending money, right? You can't buy, 10 shirts. You can only buy 5 shirts for that same amount
Right.
of money. And that creates a recession, right? That means the gross domestic product, the total number of goods and services which are made by a country, it starts goes down because people don't have as much money to buy the same amount of things. And ultimately, again, why we're here is that
Right.
once you get a recession, that's what creates decreased earnings and the stock market price goes down, right?
Right.
So, the what we do in the economy in terms of jobs, in terms of factories, and trying to bring all this stuff back in the United States has nothing to do with the stock market. And a lot of people just don't understand the stock market and the economy. They're
Yeah.
related. They're very, very separate things, right? And so, being a good investor, you just have to understand it's math.
Yeah.
Like,
And
there's
I
only
think
that can happen.
I think it gets discouraging to a lot of people who look at these shows, they look at CNBC and they talk about how the stock market is hitting record highs, but then their local economy or their personal economy isn't getting better.
Mhm.
Prices are going up, inflation is going up, bread is 20 to 30% higher, eggs are expensive, milk is too expensive, gas is up.
Yep.
So what do you say to the up and coming investor who's probably got $500 to $1,000 to play with in terms of discretionary income? How does the tariffs or the stock market or the
Right.
overall economy, like, should they be saving that money or should they be buying the dip? Because it's both. It's a bunch of different perspectives out here, and if it's going to be a recession and then jobs are going to get cut and people are going to start losing their jobs, um, like, what advice would you give to somebody that is from a lower income that's trying to
Right.
invest, or should they start saving that money?
Well, even for any income, right? So just for a frame of reference, the stock market has probably gone down 10% this year, right? So if you have, millions of dollars in the stock market, that's a lot of money that you lost. You know what I
Yeah,
mean? I was talking to one of my friends and he was like, "Man, I just lost $100,000 today." And if you really think
that's
about
a lot
that,
of
like
money.
that's just one day, right?
Yeah,
And
that's awesome.
so the irony here is that now this is affecting upper and middle class people, right, that have amassed large amounts of money, and they're seeing really big changes for here. When we look at and when we look at the stock market, every single stock has a certain price to earnings ratio. Okay, so when we see the fall of the stock market, well, that decreases the price. And so typically when you have this understanding, you're like, well, I'm gonna go and buy the dip. The stocks are on sale, right? But it's not quite that simple, right? Because the other part of that, equation is your earnings, right? And if you, again, what we just said is if you place large amounts of tariffs on something, people spend less money. And so these companies, the fear is that the earnings are going to go down. So although the price of this, if any individual stock goes down, you've got to really pay much more attention to what the earnings will be to see if it's really something that you should take or not take, right? Because the stock market, right, well, 2 weeks ago, let's say the stock market was priced at 21 times earnings, right? Now, let's just say it's down to, 19, 20. But historically, the stock market has been 17 times earnings, right?
Right.
So if you really think about it in a historical context, the market could have a significantly, as a global sense, right? We're not talking about any individual stock, could even go down any further, right? But then also when you take a look at, the market, you also understand that um, when large tariffs have been placed in the economy, it's been like 3 times. Historically, it's been followed by a recession or a depression.
Right.
And something that, like, especially for young investors, you've just never seen before. You know what I mean? And even your big brothers who are my age, like, we've seen recessions. We've never seen good old variety depressions that are lasting
Yeah,
years.
yeah, that's crazy.
Like, but to this level of rapid increase in in tariffs and all these types of things, that's why we're seeing interest rates drop, right? Because basically your 10-year treasury bond, right, what you buy, that it kind of shows the value of credit for the United States, it's going down as well. So all these things are screaming, man, this could be a depression. This is not what we would have normally have expected.
Right.
So what we need to do then is to I always share information that is given to me. I always tell you, I invest personally, but at the same time, I've got a private banker. My private banker gives me advice, um, and I'll kind of share some of that. But his big thing was, to stay steady, right? Um,
Well,
his big
like
move
dollar
is
cost
that
average
if
into it.
there really should not be any drastic changes that you have in your portfolio. So um, you really have to take a step back and just kind of think about it for a second.
So you're saying like dollar cost average into it, no
All right,
matter.
James, you see me?
Yeah, I see you. Can you see me? Can you see me?
James?
I can hear you. Can you hear me? You hear me?
Yeah, I hear you now.
Okay, I don't know. I mean, maybe it froze or something, but I was able to hear you. You just probably wasn't able to hear
Oh
me.
yeah, I can hear you. I was like, yeah,
Okay. Yeah, so so we can go back into it. So a lot of people believe that President Trump is using these tariffs as a negotiating tool to get better um reciprocal tariffs from other countries. That's one thought. Then other people believe he's trying to tank the economy to make his billionaire buddies rich.
yeah,
Um without getting into any type of
yeah.
political back and forth, what do you think is the real
Mo-
intentions behind tariffs? And is it going to be good for America, or is it just going to put money back into the billionaire's pocket?
Yeah, it's a great question. The other thought is that um, he's putting up a bunch of tariffs because it will then decrease interest rates, and
Yes.
decrease
Yes.
interest will then allow folks to start buying houses again,
He's trying
right?
to
So
put pressure on Jerome Powell to
it's,
combat inflation and decrease interest rates.
yeah, so I think that one, what he's done, and this is again not political. These are not reciprocal tariffs, right? If you look at the formula for how they decided, to what percentage to put tariffs on, it's not something that, like, is universally agreed upon by economists, by financial folks. We've never used it before. But if you really peel back the layers, it looks like he's trying to address the trade deficit, very, very different from tariffs. So, he sees that we import a lot more from Vietnam than they import from us. And so they've used this formula that's again completely artificial to put a tariff in place. And so I just want to be very, very clear. This is not reciprocal. This is not half of what they do. This is all about a trade deficit, and it has nothing to do with the actual tariffs that are placed on you. Because really, the fallacy is that a trade deficit by a growing nation who has a lot of intellectual property, like we don't necessarily make a lot of stuff, but we think of a bunch of stuff, right?
Yeah.
That has been what's been driving the economy. So I think that our president is older, right? And he has this kind of view of America as an industrial state, of the
Yeah.
30s, and what we did during World War II to build a bunch of ships. That's his worldview. And his idea is to literally bring manufacturing back so that the economy starts looking like the economy of the 30s, which again, I think if you look at CNBC or any Wall Street folks, they're going to tell you like you can't go back in history to create an economy because it's going to take years for us to build factories. It's going to take years for us to find the workers to work in those factories. Like it doesn't work that way. So it is. I'm hoping, as I'm sure most of us are, is that this is temporary and that he is bluffing, but he's given no indication that he's bluffing at all. And if he does ultimately place, not only this 10% minimum on tariffs, but you're putting 85% on some countries, 40% on other countries, it can create and ignite a very large trade war, and our country could see massive inflation, like massive inflation, which to your point is why we're asking Jerome Powell to decrease the rates. So to an investor who's got $500 or $1,000, I would say, first of all, it's no time to be a hero. You know what I mean? This is not the time, because nobody really, because a lot of this is so secondary to not, it's not a function of the economy. It's a function of the will of one person to see, is there enough pain for him to change course,
Right.
or how stubborn is somebody? You know, older folks can be pretty stubborn, and they can watch the whole world burn and still convince themselves that this is the right thing to do. And I
Yeah.
think that's the scary part of right now. You know what I mean? For someone who's got millions of dollars invested in the market, it's scary when you have somebody who is that entrenched in any financial ideology that's so drastic. That most folks from Wharton or from The Economist, that they're going to heavily disagree with what policy this is and the outcomes of it.
You
Um,
know, I have so I understand exactly what he's quote unquote trying to say in terms of bring manufacturing back. I'm from Detroit. So no city has been hit harder
right.
than Detroit, Michigan, the Motor City, a place that the car was invented and the whole assembly line and the 9 to 5 was created. That no place like the Midwest, Cincinnati, Cleveland, a lot of these places are devastated now because a lot of the manufacturing is in Mexico, Canada,
Hmm.
and some of these other places where the labor is cheaper.
Yep.
So on the surface, I understand what he's trying to communicate and say. We need to go back to making cars here. We need to go back to making these products here. But then on the one hand, as a person who went to college and as a person who has employees and who understand the job market, it's very, very tough to go back, especially within the next 3.5 years or 4 years that he's in power, because it takes 3-4 years to build a plant. It takes 3-4 years to find the right workers. It takes 3-4 years to even come up with these plans that make it make financial sense. And a lot of these companies are reporting earnings on a quarterly basis, and they have to appease their shareholders. So
Yeah,
I
you.
don't.
That's such a great point because he could have just said, "We're going to have these exact same tariffs. We're going to implement them in 2 years. You have 2 years, which would be a miracle for any company to onboard. But we're going to give you 2 years to go and do this. But we're letting you know." But instead, it was like these tariffs are here, immediate, effective, and there's no realistic way for anybody to change their supply chain so that
Right.
you go and do that. So you hit it on the head. It's the idea itself is completely draconian and it's crazy, to even like think about, but to make it done all at one time. That's why you look at the futures now and the market is down another 5%, for tomorrow, right? So it is dangerous. You know what I mean? Because eventually, what's going to happen, and this, I always talk about banks. Banks are the fundamental essence of how I look at the stock market and interest rates.
Right.
Banks start getting stressed with this. You know what I mean? The valuation of the market is going to create some credit problems eventually. Okay,
Yeah.
and again, all of these things are artificial, right? This is a man-made problem. This is not COVID. This is not war. This is not any. This is
Not
just like,
2008, where
yeah,
it was a mortgage crisis and a housing crisis and all of
yeah.
that.
This is just like, oh, we're just gonna change things.
Right.
So now with that being said, are there certain companies that are able to probably withstand it better? You were talking about Berkshire Hathaway, right?
Yeah.
Warren Buffett is still. Uh, I know that's always been one of your favorite ones. It's one of my favorite ones now. But I mean, it's still up. 9% year to date, while everything else has gone down.
Yeah.
But that's also like secondary to all the investments that he made, and this man has a ton of consumer staples in his portfolio, and
Yeah.
those and to do better, during times like this.
So it's Sunday night. So people are probably going to watch this either, Sunday night when we put it out or Monday morning. The stock market opens up Monday morning. Um I feel like it's a game of chicken going on, and
Yeah,
investors are now trading on the headline. I mean, they've probably been doing this for years. Um I'm a newer investor obviously because I'm just young, but it seems like it's worse now. Like Trump can come out and say, "Oh, we negotiated the best deal ever last night." In the stock market, you see Meta, you see Microsoft, you see Nvidia, you see all these stocks just shoot up 5, 10, 12, 15%. And now it's like, well, all the people that realized the gains, last week when the market was down, now they're having a bit of remorse, and now they're trying to get back in, and now the market gets at a high, and then 2 weeks later, Trump comes back and say, we're doing tariffs on everybody again. And now it's like,
and it's all over.
it's
Yeah,
so much uncertainty in the market. So,
great point.
yeah, so
Yeah,
what would you say to investors that are investing in an uncertain market? Like, how do you even weather these storms?
right. Well, that's the problem because companies can't invest, in an uncertain environment, right? Uncertainty is what kills stocks, right? Because it's one thing, even if you just gave us the worst news in the world, but you said that this is the way it is, there's no changing, at least you can plan around it and budget around it as a company, right? If you're a CEO and you're like, I don't know what's going on, what if he took for face granted, this is what Trump says, and there's an 85% tariff on Vietnam, and you're the CEO of Nike. Now, understand that, you know, um, Nike and other countries were encouraged by previous administrations to move their operations outside of China to Vietnam, right? Like, Vietnam was supposed to be the location to move your business. And
Yeah.
now, just several years later, they did that. They were, pressured to do that by the government. They said, we're not going to have involvement with China. And
Even
now,
India, a lot of companies like Apple moved like I think 12 or 15% of their operations to India.
yeah, right, right. India is being is another country that's being heavily tariffed, right? So you just told us to move it away from China, and now you're saying to come here. What if, again, it takes 3 years to build a factory? What if, and that's a presidential cycle, right? Even
Yeah.
more so, the midterms are going to be, in 2 years, right? And now
Yeah.
but probably the Democrats are going to take back the House because everybody's unhappy. It just shows like for the next 2 years, things are, it could be a real problem for the market. It could be a real problem for
What if
business.
he does? What if he does? What if this is a part of his plan? And this is probably the problem with President Trump is when he does things and it turns out good, everybody say he's a mastermind. This is a part of his plan.
And
But
his
then when he does things that's wrong, people say, I told you so, right? So what if this is a part of his strategy? Hey, I ran on tariffs. I told you I was going to negotiate, and the midterms are in 2026. He puts pressure on Jerome Powell to cut rates, and then he takes all the tariffs off. So going into the midterms, the market is good. The economy looks like it's growing. Everybody's back happy. Their 401ks is up. And then soon as the midterms are over, he go back to his maniac, negotiating. So do you think
well,
that's going to work?
well, the problem is that I don't know if you've got 2 years until the midterms. Um, the Republicans in general have been very wary to step up to Trump, but they're going to lose, and the one thing that will make, people kind of do the right thing is a sense of, survival, and if you look at some of the elections in Florida recently in Wisconsin, Democrats have made large gains. And so
Yeah.
there is a thought that, there will be some type of restraints that could possibly be placed on some of these decisions. Because technically, tariffs is the power of the purse is from the House of Representatives. It's not a presidential thing. We've made other laws that give our president, flexibility in doing so. But
Yeah.
this is really, it's all about the House, and as long as the House does this, it's a problem. So it's amazing. This is the most amount of politics you and I have ever spent on a Black Millionaires conversation, right?
Right.
But this totally affects the stock market for right now. And one of
Mhm.
the worst times to invest in equities is uncertainty. And when you're trying to bet on one of the, political parties to be successful or not, you know what I mean? Like,
Mhm.
because that's not about the fundamentals. It's not even about momentum trading. It's just about some external thing. So, there are other things that are investable, right? So
Yeah.
things that probably aren't bad. This is the time where we've seen shoot up,
Mhm.
gold shooting up, because gold is a safe haven in times of uncertainty, right? We're seeing
Yeah.
record prices for gold. Um, Central banks have purchased gold at larger amounts than we've ever seen before because of all this political rhetoric.
Yeah.
So gold, I think it reached a level of 3,000, and it continues to do well. And as long as inflation, right, gold is typically kind of tied to inflation, and right now people are thinking that inflation can go up because of the tariffs. Now, what if it causes a recession that will make the rates go down, but there's still this upward pressure for inflation that exists. That's why gold has been considered a hedge. So maybe this is a time to put your money into some of that. The
Yeah.
second thing, hard assets, houses, copper, gold, those types of things are not as closely tied to interest rates. They can be much more stable. So I think there was an article where I think Manhattan had the highest growth of high net worth condos sold within the past month. Why? Because people are liquidating their stocks and they're just buying apartment buildings and apartments, right? Because
Yeah.
they're not going to see that fluctuation as much. You know what I mean?
Mhm.
Um, and so, and relatively speaking, even cryptocurrency, right? Look at Bitcoin and so forth. Like it's always been tied to the market, but I think it's around. I haven't looked, but on Friday it was around 80,000 for Bitcoin.
Yeah.
That hasn't necessarily been as volatile as the overall market, right? So
Mhm.
kind of looking at the last thing people are looking at a lot of private equity stuff. That's not really for low income investors, but if you invest in private markets, um, it's shielded from all of these fluctuations in the market. and even getting some treasuries. They you know, their yields aren't as great as they were, you know, a couple years ago, but you know, you're still getting, you know, 4% for, you know, a 1 and 3 month treasury note if you want to keep some stuff
Yeah.
in short term note. It's really easy. You just go online, you put it in. A month later, they deposit it back to your account. And those are some things that if you're a more conservative investor and you don't have a lot of money, those are things that you consider. Like, you know, you're going to get 4% annually on it. Maybe you want to do that.
How is this affecting how do you see this affecting like the private markets and companies staying private longer? Because that, you know, over the last, I would say, especially the Biden administration, a lot of companies stay private. And, you know, that was one of the selling points that people were promoting, saying, well, when Trump get in office, M&A is going to go
All
up, the
the IPOs,
IPOs are going to go up. And then we just seen Klarna, they pulled their IPO because their IPO was supposed to come, you know, within this month. They pushed it back, I believe, 2 months due to
yeah,
uncertainty.
right.
So there's been a lot of companies that pushed their IPOs back because of the uncertainty. So do you
Now,
see that continuing?
yeah, yeah, you are you're 100% right. Like, we are really hoping for the IPO market to go up. That would also mean that the bank stocks like JP Morgan, Bank of America, Goldman, you know,
Yep.
we're thinking that those stocks were going to go up because IPOs would go up and they'd make a ton of money off of it, right?
Yep.
That's one of the reasons why bank stocks had been doing so well this year, right? But now with all this tariffs and all that kind of stuff that's happening, we've seen sharp declines in bank stocks because they're afraid, to your point, that the private market and the IPO market, which are, you know, I mean, they are concerned that there will be fewer IPOs. There are fewer IPOs than Goldman, um, you know, BlackRock, all
JP
those.
Morgan, yeah.
But the, you know, the investments themselves inside of these private markets, I think, are fine, right? I mean, there's, you know, they're depending on what they, you know, what's inside of those things, right? Um, as an investor, you would think that that money um, is not going to go anywhere. But if it is tied to retail, right? If it's got anything that's involved in retail, clothing, those types of things, you could see, you know, the performance that were done inside of these private deals. They were thinking that the cost of services were going to be X, and depending on what, you know, what business they're in, it could go up, you know, 20%, right?
Right.
Automobiles, you know, you're talking about Detroit. You know, Detroit was made for automobiles, right?
Yeah.
But with the tariffs that are in place, you know, you know, even Ford and, you know, all kinds of companies still get parts of their cars, not the entire. The car may be manufactured in Detroit, but you may get a mirror that's made in, I don't know, the UK, and you may get, you
Yeah.
know, you know, so it's like, how do you decide what percentage of anything that is, you know, that is imported goes to the final cost of a product? You know what I mean? And so all of this is just so, it is unclear, right? And so,
Well, and that's a good point because you know, they put up a you know, Elon's is Trump buddy, so they put up a, you know, cars made in America. Then Tesla was 100%,
oh,
Rivian was 100%,
yeah,
Lucid was 100% because these are all EV makers. These are some of the newer EV makers. But
yeah,
then Ford was like 79%, which is high for a old car company like Ford.
mm,
Stellantis, which is GM, Jeep, and all of them, they were like 40 or 41 or 42%. And Stellantis, they just paused all their, like, they just laid off a whole bunch of people in Detroit. They just offered a buyout to a whole bunch of people in Detroit, and they paused their manufacturing in like 4 or 5 plants in Canada to try to, you know, wave the storm of this you know, the tariff situation, try to see what's going on. So Detroit or the Midwest is in a messed up situation because you damned if you do, damned if you don't. Well, if they bring manufacturing back, it's like, that's a long stretch, but if they do that, you're good. But even the tariff is going to affect whether they make it in America or not, because they still got to shut these plants down, and then these cars and all the inventory that's sitting on these lots, they're going to go up. A lot of people are, they say Volkswagen, Ferrari. Well, Ferrari,
Yeah,
and nobody really buying a Ferrari anyway,
yeah.
but
But
that's
the,
going to be
the,
affected.
the Ferrari stock was doing really well before all this. You know what I mean?
Yeah, yeah, exactly.
Which is, I mean, I think that, you know what? Here's a pearl for anybody who's thinking about getting a car. The used car market is about to be bananas. Okay, like it's going to go up because the price of production for new cars is going to be crazy. Technically, the tariff for automobiles starts May 1st. So you have this month. I think everybody's going to go out. And if you are thinking about purchasing a car, my advice is to go out during this month. And that's, that this is real stuff. You know what I mean? I think that they're talking about, trying to make the interest rates for cars deductible because they're saying that that's going to help. But in the end, the price is still going up 25%. You know what I mean?
Yeah, and the price
So
is the price. Yeah.
the price is the price. You know what I mean? And so if you all have been entertaining that with your families, my greatest advice is that you get this done before the first of the month. I mean, that's just a business thing, and I'll imagine that inventories for cars at your local dealerships are going to start going down probably rapidly because people know that this is going to happen.
I want to know your thoughts on do you believe we're in an AI like bubble, like kind of like the .com situation? I mean, obviously I was real young, so I don't know. I only know history based on my reading and some of the documentaries and things that I watch. But
Yeah. So
everything is being rebranded as AI.
yeah,
And Nvidia is the poster child AI. They sell the chips, so they're quote unquote selling the shovels during the gold rush, and they shot up tremendously. I know that was a stock you recommended like in 2021. And if
if
anybody's listening to this,
anybody paid attention to that,
yeah, anybody paid attention to that, they definitely made some money. But do you
yeah,
think we're in a bubble? And I asked that because um it just seems like nobody's really making a bunch of money off of it other than Chat GBT, but they're raising so much money and their valuation is so high and they're burning so much money. It almost like their revenue doesn't even count,
yeah,
even though they got 500 million users and
yeah.
10 or
So
20% of
I
those paid.
right. So one question is about Nvidia, one is about AI. I'll say that um, the AI revolution is nothing like .com, right? And during the .com crisis, people would literally just put .com and the valuation would skyrocket. The difference is that with AI, they actually have real earnings. Nvidia has earnings.
Correct.
They are bananas, you know what I mean? Which then gave them the right to enjoy this really large valuation. Okay. Now, like most things, it's always a matter of like to what degree is it? You know what I mean? And if you look at Nvidia, I want to say it closed at like 90 something.
Yeah,
And
yeah, it's under 100 now. Yeah.
and it was like 130, 140 at its peak. As of right now, Nvidia hasn't changed its earnings, right? Like it's
Yeah.
they're still saying um, we're still going to go and produce this many chips because the demand is still this high. And although there's the Chinese program that was created that thought that open source could
Yeah.
dethrone it or whatever, like I don't think so, right? And so that's why people are. If you look at the total valuation for Nvidia, um, people are starting to nibble on it. You know what I mean? Like because it's so something also for people to take a look at is during these really difficult times for the market, there's something called the VIX. The VIX is a measure of how much panic is in the market. Okay,
Okay.
and so the higher the VIX, the more the panic, the more the opportunity for those who are not panicking to go in and purchase some stocks, right? Sometimes the VIX rises and it's appropriate. Sometimes it's like, yeah, you should be concerned. But when the VIX reaches like 40, this, kind of critical level that you see there, that's when what we call in the stock market capitulation, right? That's
Hmm.
when we think it's kind of at the bottom. It's probably overshot to the downside and is the opportunity for, new money and new wealth to kind of come in. And, the VIX had been pretty high over the past 3 or 4 trading days. I mean, that's why we're down 10%, right?
Right.
So I imagine it will increase tomorrow. And at some, to your point, at some point you do have to start looking for things. You know what I mean? And perhaps looking at an Nvidia, where now the price has gone down, but the earnings as of yet, I mean, I think there's always, with a recession, you're always concerned about it. But any bounce in the stock market, the very first stocks are going to be what we call high beta stocks. It's these stocks that tend to have kind of earnings fluctuations in the first place. Tech, okay? It's the,
Yeah.
you know, in a bounce, tech is going to bounce the hardest and the highest. Now, whether it's just a limited bounce and it tends to come back down, who knows? You know what I mean? I actually thought that we would have bounced a little bit earlier, but I mean, we're due. I think that again, when Powell spoke and he wasn't really dovish about taking down rates. He didn't say, "Oh yeah, we need to go and get them down." He's like, "Well, we'll think about it." I think that created a lot of angst in the market. Um, so I think in general, if you're looking at number one, understanding that a recession to many people, it's a 50-50 chance of it, right? And thinking, well, have we priced in a real recession into the market?
Hmm.
Um, that's debatable. I mean, I would probably say not quite, but we're close. And it depends. Are we talking about a short, shallow recession of just 2 quarters of GDP decreases, or are we talking about 3 or 4 quarters
Right.
of it? Like I don't know. Like nobody knows how long these things go, but usually, you know, uh, the thing is, we talk about it. We talk about recessions, and by the time we realize that we're in it, we're already on our way out of it. You know what I
Right.
mean? Stock market's gone down, so it's like an exercise of the mind to some extent.
What do
Um,
you what do you say to the young folks that follow us that say my 401k is down, my Roth IRA is down, what should I do? They're panicking, they're DMing
anything.
us.
Don't do anything. Do not touch that. If it's a retirement account, so let's talk about the penalties for taking out your retirement account. Um, you're gonna have 10% penalty plus capital gains. Um, sometimes you can't help it. You know what I mean? Let's say you got to get married, right? And you got to liquidate your 401k, or some people liquidate again their 401k now because they had we call a 529 account. It's an account that you have for your kid when they go to college. But now that account has gone down a lot, so they still have to liquidate it. But it should be the absolute last case scenario. Do not, I mean, so whether you liquidate it is one thing, just even switching it up to, stocks and bonds. Guys, you guys have, 20, 30, even 40 years before you retire. Like
Exactly.
we've seen this stuff before, guys. Like, don't do that, and if anything, this is a great opportunity to continue to contribute to your 401k. Now, that's very different than your typical brokerage account where sometimes people use that. I use it. I'm like, I don't need a bunch of money just sitting in a bank account not doing anything.
Right.
Um, these are times where like, well, you need to look at your own risk tolerance. I'll let you know. I probably have so I'll give you the differences. My private bankers have probably 2/3 of my investments in the stock market. I have a third, and I
Right.
always say there are people who are older and smarter than me, and you know I don't need to hold too much money or else I'm going to be dangerous, right? The difference between what they're doing is that they're like, Savoy, we're going to let this ride. You like, dude, like, don't move anything. We don't have enough information as of right now, and this is a private bank with Bank of America, and they're like, don't do anything. We're gonna sit there and we're gonna just watch, and you're gonna sit there and watch, and that's it. And I would say 95%, 97% still remains in equities, and it's just sitting there. Now, I have been I'm like in my mind, well, you guys have 2/3 of myself. I don't want it all to go away. So I have about 17% of my personal portfolio in cash. All right.
Hmm.
And I had sold some stuff earlier this year just because of like personal things that I wanted to go and do with it. As you know, I make movies, so I kind of took some.
Right.
Um, and now I'm kind of looking at it. I don't think I need to put like, and 17%, folks, is I would say relatively large, right? Most people may have 5 to 7% in cash and think that that's kind of enough to go and reinvest.
Right.
So it's on the larger side, and if you look at that, that would be on one of the more conservative sides for this. Um, but I have started to start purchasing more. It kind of sucks because every single time I put some money in, it still keeps going down. But if you do have cash, I would advise you, if you're going to go and buy something, make sure you dollar cost average into the market. You don't have to put all your money down at one time. That's just basically saying, maybe over the next, couple of months, you put a portion of what you have in. So you're not ever paying too much for something, but at the same time, you're not missing out, the fear of missing out type for any potential bounce on something.
Yeah.
But you can look at some stocks that are doing really well that traditionally haven't done well, like Coca-Cola. Dude, that joint is like amazing, right? It's
Yeah.
a all the consumer staples, Heinz, all that stuff that nobody really cares about. People are diverting away from this Nvidia stuff to Coca-Cola.
Yeah.
You look at Coca-Cola. I think I heard that the multiple or the no, maybe the earnings or the multiple of Coca-Cola is the same as Nvidia, which is like ridiculous. Which is
Right.
one of two things. Either Coca-Cola is valued way too high and it's probably going to go down, right? It's at the peak of this fear trade,
Hmm.
or Nvidia is valued way too low.
Right.
Pick the one, but you can't have both that are right. You know what I mean? So um but right now, if you really are concerned about a recession, I would look at utilities. I would look at consumer staples. Um, Healthcare is kind of like, because they've been all not in addition to the tariffs. They, as many of you all know, they're trying to reduce the budgets for the government, and they're taking out um, yeah, Medicaid for sure, and parts of potentially Medicare and reimbursement. So healthcare may not do quite as well as staples and utilities just in this context. But yeah, we've definitely and it's okay. Like it's okay to move away from growth stocks, right?
Mhm.
And even if you're looking at mutual funds, maybe you look at, instead of the SPY, right, which really affects the the number of stocks in the stock market and the valuation, maybe you move to a more of an equal weighted you know, index fund. So
Hmm.
every stock of the S&P 500 is the same. And Nvidia and Apple don't have these huge overweightings, and so all this China business and all that stuff isn't won't affect your investment as much. But you
Right.
really definitely take a step back, look at your portfolio, maybe look overseas. There's a lot of overseas money. I mean, there's a lot of money going into European, Hong Kong, um, even Chinese stocks. The question is whether the tariffs are going to, hurt those economies or not.
Right.
This is, diversification is much more important now than before. And so whatever your portfolio looks like, whenever you're buying something, just don't buy the same thing of everything. Just I would very much so think domestic, internationally, some growth, much more value. If you're, and look at Berkshire Hathaway. I love I mean, they are the perfect stock for this market,
Yeah.
you know.
And then what's crazy about them? They haven't made any big large move acquisitions. They're sitting on all of this money in
Just sit
T
on cash.
bills. They're just sitting on cash, and now it's like Buffett looked at like I think it was Bill Ackman said Buffett is too conservative. I don't, he need to start investing more. He need to do this, and now he's looking again like the genius he is like, oh, now he's looking. He's the only He's up, what you said, like 9 or 10%, 12% or something on the year, and
Yeah.
all these other stocks are down, and it's like, and he still got his money. He still haven't made a big acquisition yet that
Well, we
he
don't know.
announced.
Right. Right. He usually reports every so often. So I don't know. We
Yeah.
don't. I bet you they're doing something.
Well,
I'm
their
so
annual meeting is May like 6th or 7th or something. So these
right.
gonna get
So
big
he's
news.
not going to tell us what they did. They're doing things now, and then they're going to tell us something in May. Like, yeah, we bought 1 million shares of you know some dairy company. Now, dude, really, you did that? And we,
Right.
so he tells us after they've done this so that they can make their money. But I think there's no predicting where this is going to go. I think a lot of people have said like the lows could be like around 4,800 on the S&P if you start
Yeah.
looking at recession. Um, but a lot of people, so this is the dangerous part, and you mentioned this at the very very beginning, is that earnings season is about to start up, right?
Yeah.
Earnings season, just so everyone knows, is that like every quarter, all of the public companies report their earnings. Okay. But not only do they report what they've seen, they also give projections into the future. Okay.
Yes.
So what the real shoe to drop is this quarter earnings season when everyone comes in and says, yeah, we've been doing fine, but our estimates for Q3 and Q4 have dropped 30%,
Yeah.
40%. And with the drop of those estimates, really bad things could happen.
Yes.
Really bad things. And so, I imagine that many of these companies are going to say, we don't have a line of sight as to, really similar to COVID. We don't have a line of sight as to what this means because they probably don't. They probably have no idea.
Yeah.
But, you could see some real turbulence in the estimates. And that's my kind of that's why I'm sitting on 17 because I'm like, there's some stuff that can go down. You know what I mean?
How do
Uh,
you balance like what advice would you give to balance to people who want to be in the market, but they also have this recession hanging over their head, and they're like, well, I don't have the abundance of wealth to
yeah,
ride it out. So should they be saving their money? Should they be
yeah,
like, so how does that work? Because
yeah.
people want to get in on the action, man. They see all these stocks going down. Oh man, this is my time to invest. This is my time to invest. But then it's on the other end. It's like, well, if the stocks continue to go down and we go in a recession, this is your time to save, and pay off debt or
Well,
things
right.
like that.
So the reason why we go into a recession will tell you when to go and invest your stocks, right? If we're going into a recession um, because of high interest rates and maybe the Fed can do something about it, that's one thing. But if we're going into it because of just earnings problems, that's a completely different issue.
Right.
So um, I think that if I am an investor who wants to put money into the market, I would definitely um, dollar cost average my way in, or save in a shorter time span because anything, as you said, anything can ultimately affect um, when these stocks are sold. So
Yeah.
looks like we lost you again. So we will
You
wait
can't you can't
until
hear
he
me?
can get back on.
Can you hear me now?
Yep, you're back on.
Okay. Yeah, I don't know what's going on with that, but I was able to hear you and I was able to hear your
Yeah, yeah.
response. So we'll just keep going from here. How long you got? I know we're approaching an hour now.
I'm chilling, man. And dude, I'm chilling, dude. I got some time. I think, like I said, I'm looking at the futures now.
Hmm.
So it was a low of 4%. Looks like the futures are, minus 3.5. You know,
Um, I got a question for you. So I think a lot of novice investors look at the price of stocks, and let's say Nvidia is under 100 now. So now they're like, oh, it's a good investment. But when it was 130 or whatever the price was, they look at the price. They don't really look at the market cap or the PE or the
the earn,
revenue. the
Yeah.
earnings. They don't look at any of that. They just look at, oh, the market cap. I mean, the price.
Yeah.
So how do you balance making your decisions in terms of your personal portfolio that you have, market cap, PE ratios, or even earnings, or looking at forward earnings and what people are projecting? Because there's certain companies that, like Nvidia, the reason Nvidia is such a good company is because AI is the new kid on the block. And if Nvidia is dominating now, they're going to have they're projecting a long-term strategy that is going to benefit from all these companies monetizing AI strategies.
No, no.
So even though it's a $2-3 trillion company, it still is looked at as a growth company. Like it's looking at they're looking at the forward progress of the company. So like, how do you balance the market cap, PE ratios, and the price of the stocks when you're making your personal decisions on investing?
You make again, that is the $10,000 question, right? I think that like I typically um I do my research and I actually do um like to know of what projected earnings that exist, right? So, we always talk about like what my larger holdings are, right? So I
Okay.
still have, just a typical S&P 500 index fund as my largest investment because, I don't know what's going to happen. We'll
Hmm.
wait and see, right? But then my second largest is Berkshire Hathaway. Then I have Uber. Then I
Hmm.
have Lilly, JP Morgan, Meta, and then I have RSP, which is the equal weighted S&P 500, right?
Hmm.
So if I'm looking at Berkshire Hathaway because they're so conservative, they have staples, and they kind of went to the top on their own. You know what I mean? I wasn't even purchasing more since their valuation was increasing when everything else was decreasing.
Right.
Um, Uber is actually not tech; it's an industrial. Technically, that's how it's listed in the S&P 500. And
Okay.
a lot of these things are out of all the things that people are willing to do or can change. What are the things that could do well? Well, I think that having cars may be a problem, right? So those who have cars are going to become more valuable. So guess what? Uber then is going to be able to dominate the price structure and pass these things on to consumers more, right? Because they offer a service now that people literally can't do without. People have gone without, more people could be going without cars and having to Uber more.
Right.
So, when you look at earnings, right? Irregardless of the economy to some degree, right? Uber Eats, I think, can take a hit, but the other part of their business, I think you could actually see increased demand.
Yeah.
Like who knows? Am I right? I have no idea. Um, you look at Eli Lilly, they still have the Ozempic, type of drugs that they're making.
Facts.
People are never going to stop caring about their image or the way they look like, and there are increased utilizations for this, right? And Lily's, the lion's share for it. So I believe in that.
Hmm.
I think JP Morgan is one of the things where I'm a little bit, I mean, banks in general, I'm a little bit concerned with. But, you know, um, they were just doing really, really well beforehand. I mean, it's almost a hedge where if this all goes away, banks should actually do very, very well if the tariffs are minimized.
Hmm.
And Meta used to be my largest holding. It's gone down a lot, but I've sold enough of it because Meta makes its money off of advertisements. If we go into a recession, less people will be buying these advertisements. So theoretically, their earnings could be going way down, right?
Right.
Um, I'll tell you, some interesting ones on the other side. After my equal weight, I look at Netflix. Um, it's still a subscriber service, right? It has nothing to do with like material products, right? So
Yeah.
they're it's a service. It's not like they're having to import software, hardware, those types of things.
Yeah.
So yes, if less people have jobs, less people can pay for Netflix services, but they're still getting market share by cracking down on passcodes, and they can always adjust the price, and people
Yeah.
definitely are
And they
going
can always adjust what they spend on content too. I mean, they
that's right.
project
And,
to spend
oh,
like
yeah,
I
they
think
have more.
$18 billion on content.
Yeah, they have more levers. I mean, I think Netflix is interesting for me because it's not as high. I mean, then I got some that I'm concerned about. Amazon. It's
I was gonna ask you if you like Amazon or not. I like Amazon.
well, I mean, the whole thought is, can Amazon control their supply chain? A lot of people are saying yes, right? They have the biggest voice in terms of, all these producers and all these people who are coming in and saying you're going to eat the cost and or finding other ways to decrease those costs. So, but it's still heavily tied to the economy, right? So,
Yeah.
if there's a recession, Amazon, any what you call consumer discretionary, you know, um, whether it's Polo, Tommy Hilfiger, apparel, Nike, those types of things, people are just going to not spend as much on that, and if you don't spend as much in retail, Amazon could be an issue. But if it's again so big, so large, you're thinking that you can kind of manage those costs. Amazon could be for sale. So it all depends on what you think about it. Microsoft is another one. It was quote unquote an AI play, but
Yeah.
Microsoft has done a lot with their earnings anyway, and a lot of people have been getting out of that.
Hmm.
Uh, Next, I have Marriott. Marriott is like the quintessential consumer discretionary. People aren't going to be going on trips if they don't have jobs. you know,
What you think about the airlines? Are you in any airlines?
I'm not, but I'm looking at Delta because
Hmm.
they've slipped to such a large extent that at some point it's looking interesting. You know what I
Yeah.
mean? Like
Delta used to be one of my investments. I actually got out. I made some good money in Delta.
good for you.
Oh
Yeah,
yeah, yeah. So Delta was a good one, and that's like my favorite airline. Man, I almost lost my shirt with Spirit, man. I got out, I got out just in case, just in time. But I put some money into Spirit, and because their stock was just tanking, man. And then I'm just like, I'm like, there's no way Spirit is gonna go away, right? I'm thinking like, there's no way Spirit's gonna go away. I think they're gonna be good. And man, it had went up probably like I would say this. Here's one of my problems that I have, and you can kind of give me some advice on it. I know how to evaluate a stock and know when a good buying point is. I don't really be knowing when to sell
man,
because I
that
be trying to have like the Buffett, hold for 20 years, 30 years, but that's just not the reality. That I
man,
can like the Buffett strategy going into the stocks help me, but the Buffett strategy getting out of them sometimes hurt me. And I
yeah.
almost lost my shirt with Spirit, but I got out probably like 8 or 9% above, so I made a few dollars on it.
Do
Um,
you still have Rocket Mortgage?
I sold some Rocket Mortgage too, so
So
I don't have Rocket anymore.
I mean, I think the housing stocks are interesting
Hmm.
because
They
if
doing a bunch of acquisitions now, man. They
yeah,
just bought, yeah, they
well,
spent it.
only because like if interest rates go down, people are going to be buying houses.
Yeah,
You understand what I mean? And so like, you know, um, the ITB, which is the index fund for US homes, like it's been kind of fluctuating.
yeah,
Uh, but so you have one piece of this is it's a recession and less people are buying houses, but at the same time, the interest rates are going down.
yeah,
So, plausibly the cost of houses could be going down.
yeah,
So, you know, like the problem is that there's so many things that are going against each other. It's like, well, how much of it is affecting, the overall price of this or
yeah.
the value of it? So yeah,
Did
getting
you?
out of stocks, but that's what getting out of stocks is right? Is like, you know, um, part of the mentality is I don't want to pay taxes. All right, I don't want to. I don't want to pay short term capital gains, right?
Yeah,
So for people who understand, if you hold a stock for um, less than, I'm sorry, if you sell a stock that you own and you repurchase it in less than 30 days, you then have got to pay capital gains. I'm sorry, you have to pay ordinary income essentially
yeah,
for any profit that you make, and that's like that can be as much as 50%, right?
yeah.
As
Depending
opposed
on
to
your income. Yeah,
yeah, as opposed to selling it for a longer term and you only have to pay 20% of capital gains, right? So
yeah.
that can be a lot of money
Yeah, that
depending.
could be all your profit. Really, that could be sometimes depending on how the math works out. Like
I
the
believe.
taxes you got to pay, yeah, it could be all your profit.
Yeah, yeah. I mean, and well, and then that's so I typically look at when to sell as the very first thing I look at is I look at my year and I think of how much realized taxes that I have. Okay. And so I am much more willing to sell at a loss if I have already done like this year, right? I've made probably, I don't know, I probably sold $60,000 in like capital gains, right?
Right.
I'm like, I don't really feel like paying the taxes on that. I don't feel like it. So if I'm more willing to trade a little bit and then take my losses and
Yeah.
know which, and keep a track of those so that I can take that $60,000 line down to 30,000. Like, you try to look for a silver lining in something, you know what I mean? And so, I know I got taxes I got to pay. So what can I do to, uh, to mitigate some of those taxes while I'm trading? And, if it works, it works. If it doesn't, it doesn't. But
Did
some,
you did you have because I know you were one of the people telling me and our audience about Nvidia. Did you have that personally, or was that an investment from your investment bankers, or and did you get
oh,
out
no,
of it?
well, it's both of us, right? I mean, I think I had it before they did, and I'm
Yeah.
still in it. No, no, no. It's just a much smaller part of my portfolio. It used
Okay.
to be number one. I mean, there was a time when Amazon was the largest. There's a time when Nvidia is the largest. Right now, Nvidia is literally, if I have, I don't know, 30 stocks, it's probably number 15. You know what I
Mhm.
mean? So, relatively speaking, it is underweight in my personal portfolio because I did the majority of that 60,000. A lot of that is the Nvidia that I sold at
Okay.
at a higher level.
Mhm.
Um, and I'm looking at it now, like Nvidia is $94, dude. If it gets into the 80s, dude, you gotta like,
Yeah, yeah, yeah. I mean, at that,
I mean,
yeah,
like it's not like, and I get the economy. I mean, I understand all of this, but I'm like, are we saying that it's just not worth anything? I mean, come on,
yeah.
man. It's
And I
just,
think, I think what you said earlier is a great point in terms of the investment thesis of how people can look at it or how CEOs are thinking. This is a man-made problem with President Trump slapping tariffs, trying to use it as a negotiation tool, whatever he's trying to do. We don't know. We're not in his head.
yeah,
But if there was like a real issue with the economy, like the mortgage crisis, like the 1999 2000 meltdown, like if it was a real issue, that is more scary than you know there's uncertainty because President Trump woke up on the wrong side of bed.
right.
So
This could be fixed with a law, right? I see there's some bipartisan senators that are going to go out and say that these tariffs cannot be enacted without congressional approval. That would solve everything. You know what I mean? Because
okay, I heard of that. Okay, so I heard of that, and I don't know. Like, I'm not a constitutional lawyer, so I don't, I don't know. Like, I have to actually go research this, but I heard someone talking about that, and the caveat to that was, well, a lot of this Trump is trying to talk about as national security
yeah,
and TikTok. And that's why he's doing the TikTok thing, national security. So the president actually has power over national security concerns
yeah,
over Congress and the House and the Senate. Um, so I guess he can make decisions with executive orders and things like
yeah.
that. So
But
that's what he's kind of abusing his power. A lot of people think he's like abusing his power in
yeah,
that part of the Constitution.
no, 100%. Well, that's why like the Constitution. Forget about laws. The Constitution gives the House of Representatives the ability to enact tariffs, right? So it's like you are correct that he can use national security as the narrative to do this, but
Yeah.
if Congress passes this, there's nothing he can do about it. It literally is like it's the Constitution.
But what about the I'm big in social media, obviously, because I own a media company, but like TikTok, right? So TikTok is like the poster child of national security now. And now he's constantly extending it, extended another 75 days. Um,
Yeah, well, I mean, think about it. That's why Meta went up so much, right?
Yeah.
Because they thought they were going to ban it, and then they thought everybody was going to run to Meta, and and Meta being Instagram and YouTube.
Yeah.
Um, I'm sorry, not
Instagram and Facebook.
and Facebook. I'm sorry, right?
Yeah.
They're like, well, you know what? Like, these social media stocks should go up. Now it hasn't happened, and who knows really what's going to happen. But all China is saying is, if you want to tariff us, we're not going to sell you TikTok. You know what I mean? And so, now as a political thing, Trump is saying, well, do I want to piss off everyone and take away their TikTok?
Yeah.
Or, and
If they take away TikTok, it's almost a guarantee they lose in the primaries. It's almost a guarantee. It's almost a guarantee.
no, no, no. Well, that's right. And so, he's thinking about what he wants to do with China, but he's like, China has some cards, and of all things, can you imagine? It's not nuclear weapons. It's not, it's TikTok. It's like, if you do something, bro, we're gonna mess up your TikTok. Like,
Yeah.
that's crazy, man. It's like, what is this world going to, dude? We're fighting. We place value of TikTok above the economy. Like,
Like TikTok is literally like kind of used as the poster child and this negotiation tool.
Yes,
Yeah.
100%.
And I think it's helping his national security narrative, because without the TikTok national security thing, the whole idea of tariffs and all of this would be like, okay, so where's the real national security risk? But with TikTok now, it's like, well, the Chinese government spying on our people and doing all of this. So I can understand. And then the Supreme Court and Congress Congress enacted the law to ban it if they don't liquidate it. The Supreme Court upheld it. So now Trump is doing the executive orders extending it, but it doesn't seem like a deal is going to get done. And I agree with you. TikTok, I mean, China is probably sitting there and say, yeah, you can tariff us, but we got your TikTok. So
Exactly what they're doing. That is exactly what they're doing, right? And all these other companies don't have this commodity, to negotiate with, right?
yeah,
And a lot of people have been saying, yeah, China needs us more than we need them. Yeah, 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 I get it. But you also have got to understand, because everybody's kind of saying, well, if you're going to do this, well, we're going to create more tariffs on you.
right.
But I think that for democratic countries, that's fine. Democratic countries are going to put up with it, and they're more willing to crater to you know all of Trump's complaints. But authoritarian countries, they'll let their people starve, dude. They don't. They're like, yeah, okay, throw our economy into it. We're still not going to do it. You're still not going to get your TikTok
Yeah,
because they don't care, right? I mean, that's the whole point in having an autocratic system. It's like, dude, we don't care what our people feel or think or whatever. So, I'm not as hopeful about some of this stuff, dude. This is this is the challenge in terms of finding again kind of investors. I'm staying out of the consumer discretionaries for that reason.
yeah,
I just don't. I have no idea. Some of the some of the tech stuff is like Salesforce or something. I get it. Salesforce is another, something that you use when when the economy's great and booming, and the ROI of that is a little bit less.
yeah.
But I mean, the only consumer discretionaries I like are like they're almost like, and I don't know, is McDonald's a staple or no, it's a discretionary too. Like,
Right.
I think people are gonna be not going to In and Out and going to McDonald's. They're gonna be taking one step down to some of the stuff.
Yeah.
But that's kind of how I look at it. Um,
I
but
think no, no,
it's
go ahead.
tough.
Go ahead. What you say?
I said, but I think it's going to be tough. I think that like for the United States people, I think in the next 2 months, you all thought that eggs getting more expensive was bad. Wait till you see everything getting more expensive. It's going to be
Yeah.
tough. It's
But
going to be tough.
I'm of the mindset. I honestly don't believe um okay, so I think he could probably get I think President Trump could get some deals done in terms of the tariffs with some of the smaller countries. But I don't think he's going to win the China battle. Um, but it's really all about a narrative. So I think with him, even if America or the US or whatever is losing in terms of what he was trying to accomplish, as long as he get the narrative, I think that is enough ego boost for him to get rid of the tariffs.
Yeah.
So I,
Look, your guess is as good as mine, right?
correct.
And I'm like, again, not being political, but like he campaigned on much of this and he fooled the United States into thinking, oh, he's not serious, but it sounds great. So we're going to vote for him.
Yeah, and he's doing exactly he's doing exactly what he said.
That's what he said he was going to do. And you're looking at the effects of just bad policy. You know what I mean? Like this is horrible, and um, I think that I think I give him too much credit to saying, well, he'd never just run the economy down so that there's like, all these bad things. I actually think that like I think he would if he really thought or felt like it was the right thing to do. And um and he wouldn't listen to other people. I think that he absolutely would do something like that. And I don't think that this is more a function of him. I think it's again more of a function of the House of Representatives to see
Mhm.
if they will get the gumption to check bad policy. But I mean, the market. I mean, I think the market could probably go down another 400 points, probably. Before it kind of settles down. I mean, that's amazing. You know what
I
I
mean,
mean?
what about all these? Are you buying all these promises that these large companies are making to move manufacturing over here? Like Apple said they're committing. Um,
All that money.
yeah, they said they're committing what 5 billion to build something here.
Yeah,
Um,
I think Trump is making it so that they have to. But again, it's a time thing. Like to put goods basically in circulation that are increased from 25 to 50% for the next 2 years until things are built. I'm like, dude, that'd be catastrophic over the next 2 years. It'd be so bad. It'd be
yeah,
horrible, you know?
yeah,
But whether he's willing to do that or not, I don't know, man. It makes no sense.
I know, man. I got a few more questions. I know you gotta, you probably gotta get up out of here.
Yep.
I wanted to go over some questions with the audience and people. I told people that
Yep.
you were coming on, so people are definitely, they definitely got questions for you. So one question you kind of already hit on, it was about the 401k and Roth IRA. But I'll ask you this from their perspective. So I'm I'm 31, so I'm the idea of retirement. I'm not even thinking about retirement. So, I just make my investments and continue to go on. But the young lady said, at what age should she start? Like, should this become a like? Should she start actually watching her account? She's 46, so at you know what I'm saying. At what age should she start really taking some of this stuff serious with her account going down, the
Yeah.
market going down, and worrying about her retirement accounts versus the small money that she have in her personal account that
Sure.
she invests with.
Well, even if you're 46, you've got 13 years until you're 59 and a half to start taking out, your retirement without penalties, right?
Hmm.
The economy's going to change a lot in 13 years. I wouldn't touch anything, right? Like, again, I would say, once you get 55, you know what I mean? 5 years in, you really need to be, even if the economy's doing great 5 years in, you still need to be adjusting your portfolio so that it's not 100% risk on. And so I'm assuming that the question that's being asked is saying that their portfolio is something that is, you know, majority stocks, majority
Yeah.
growth stocks, those types of things. Um, I would just make sure that although if it's in equities, that it is diversified within equities and it's not all Nvidia. You know what I mean? Like you need to make sure that like it's a well balanced, diversified portfolio um, with a 13-year time horizon. This is not even something that she should be looking at.
Hmm. All right, so we have we have a few more. Um, This person is having the same issue, I guess, that I have is about they don't really know when to sell. They don't really know when to sell a stock. So he gave me a little more detail. He said he's up. I mean, he got in Meta pretty good. So he says he's up 45% in Meta. Um, he's been holding it for a few years. Should
Right.
he, is it a good time? Like, is now a good time now that the market he's seen his investment, he probably was up more than 40% or whatever. Now
For
he's
sure.
seeing it going down because the market is going down. So
So
when is that a good time for him to is that a good time to sell?
look,
You gotta pay some taxes, all of that, but
right, no. So, I've been selling Meta. I'm looking right now. I'm up Meta 232%, right? And so I understand, it was a great run, right?
yeah,
One of the rules in investing is never be afraid to make some money, okay? And
that's
so,
a bar for sure.
yeah, like dude, like if everybody pays taxes, you got to pay some taxes. Will Meta recover from this? Yes. Are they gonna there are a lot of confounders again with TikTok, with whether we're going into a recession, all that stuff. If you're up 45%, again, I don't know how many shares that represents and so forth,
Right.
but the money off the table, dude. I'm telling everybody, I've taken money off the table, right? Did I take it all? No, but
Yeah.
you got to ring the register. It doesn't feel good to do it, but the worst feeling is taking a great gain and turning it into a loss because you didn't ring the register.
Mm-hmm.
So, I think, um, any, rules for, any stock is, once you start really, even, a lot of people say once you start getting 20% gains, you should start taking some off anyway. Or if you're at 45% and you've never taken anything off, dude, ring the register. Make some money. You won. Win the game.
No, that's definitely a fact. I don't know if you remember when I remember Rocket was going through that crazy jump, and you told me like, dude, take the money and run.
Yeah, yeah,
Man, I made a bunch of money because I bought in at
you
their
did.
IPO and it went up. Man, it went up. Like it was like one of those GameStop meme type
Yes.
of. You like, dude, take the money, take the money, pay the
You win.
taxes, you win.
You win, dude. You got to pay some taxes in it. Like, dude, don't tempt fate. Go ahead and take the money.
All right, and the last question, I'll go back to it. The last question was about getting started in investing, and I made a video talking about how it was like it was a follow up question to the video I made, but I made a video about how like when like the psychology of the stock market when people see the market going down and going red, stocks are on sale. So, like you said, Nvidia, they have the same earnings that they had last week or last month that they projected, but
Until us,
now their stock
until us,
is down, 8%, 10% or whatever. So people see the stock going down and they get nervous, they get scared. Versus if some Nikes you want, the Jordans they come out, they 300, now they 150. I'm like, oh my God, that's a great
yeah,
price, right? So what's the psychology behind like how do you
yeah,
what would you say to a new investor who has to get over that hump of when assets go on sale to
right,
buy versus when liabilities like
sure.
consumer
You,
goods go on sale?
yeah, you just have to know why they're going on sale, right? If they're going on sale legitimately because there's a recession, then that means that the earnings are going down, and you should not be buying anything because if it's a recession, it's going to be less valuable than it will be in the future. Now, um, if the stock price is going down because of a rumor, because of change in leadership, sometimes um, because of some third party company making a deal, and there's an overreaction because of their um, their potential market goes down. I mean, like, dude, that's when you want to go and take advantage of this. You know what I mean? But I think that right here today, it's going red. Some of them should be going red if there's going to be a recession, right? I mean, and again, you also look at the historical context of the multiple of the market. Um, it's not expensive. It was really expensive. Like we were priced to perfection.
Mhm.
which would have been, a great time to just take a little bit of money off, to your point. Like, but everybody sees all green every day and they're like, I don't want to take money off because what if I
Exactly.
keep losing? Now, so, the your psychology should be when what is it? When everybody is greedy, you should be fearful, and when everybody is fearful, you should be greedy, right? And
Yeah.
that's why we look at the VIX, we look at the fear level of, once it reaches 40, like I said before, and people are looking at pure panic, dude. And that's when you're like, let me go and see what's there. You know what I mean? Because probably not all the time, but probably because history has told us that once we get to these levels, that this is what we call market capitulation, and this is probably not a bad time for us to go and look for some stuff. But there is no clarity, so people are just sell first, think later mentality, and so they're sometimes those things build upon themselves, and that's what recessions really are caused. And people are, again, very concerned every single time tariffs have been raised like that. It does cause a recession.
Yeah.
So there are reasons to be not not overly aggressive, you know what I mean, but kind of like dip your toe in, get some things, great companies, great balance sheets, you know exposure, look at the exposure to other countries and how things are made. Look at a service like a Netflix that they don't have to buy a bunch of stuff versus um, you know a GM or something, you know what I mean. So it's a different type of thought process that goes into this.
All right, man. I appreciate you. That's some good advice, guys. So just to sum that up is if you're a new investor, make sure you do your research, and a part of your research is the fear index and the VIX, and understanding why the market is tanking. Is the market tanking because of a chaotic president? Is the market tanking because of interest rates? Or is the market tanking because of earnings? Is the market tanking because of geopolitics?
Very
There's
good.
a lot that goes into the market, and it's not just a stock is going up, it's a good company, a stock is going down, it's a bad company. There's different situations that move the stock price, and once you do your research, you start to learn why. That'll give you a better indicator of if you should be in the market.
Could not have been said better. That's perfect.
Hey man, I learned from you a
That
lot,
that
man. So
that's my mentee. That's my mentee saying, yo, 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 yo. Let me say this. Let me say this better, my guy. I love that. I love to hear it, bro.
no,
That's
you got to
awesome.
communicate it for the people, man, because people, they really a lot of people really need guidance, and they look for shows like this and
Yeah.
content like this to give them advice.
Yeah. I
Because,
mean,
like you said, a lot of people don't have access to the private bankers and the
yeah, that's
wealth
right. This is
knowledge.
all like real life. For all of you guys, I'm going up, I'm looking at my accounts, I'm reading these things off. This is what I've done. This is what's worked. This is what it hasn't worked. Hopefully, you guys won't make some of the same mistakes that I've made, right? So, this is legacy building. This is, what we're trying to do is make sure that the future generation of investors are off to a better start than we did. So, it's good stuff, man. I love talking to you, man. Thanks for what you're doing again for our people. You're saving lives. Good dude, man. I appreciate you.
All right, man. I appreciate you, bro.
All right, bro. All right. I'll holler at you, man.
All right. All right, guys. Make sure you guys like, comment, subscribe. That was a brilliant episode of the stock market update with our guy, Savoy Brummer. If you guys don't know Savoy Brummer, he's a multimillionaire investor. He is a medical doctor, healthcare executive of a multi-billion dollar company, and he's my mentor. So he gives me advice personally, and I try to invite him on these platforms to make sure he could be your mentor in a way and giving you advice. So if you want us to continue doing this, make sure you continue to support the content. Shoot us all the questions that you guys have, and we appreciate you.